Hi guys, welcome back. So, this video is about Ehang. As you know, I started to invest in Ehang in early January. I made a video about that and I said, this is the future Boeing at the baby stage. And now, after a few months had passed, a lot of things had happened, and not just the share price, which was what a roller coaster. So in this video, I'm going to tell you what I think the business model has changed. Is it heading to a good direction? I will address the opportunity and the risk behind it. Hopefully, it can help you form a long-term vision on this company and investment. So first of all, how did their business model change? At first, analysts had looked at Ehang and gave them evaluation based on their production or the sales of drone mostly, including myself, of course. We had evaluated the company based on their revenue in the past and their revenue projection for the year of 2020, 2021 and following. The speed of growth was very attractive to begin with their projection of growing 180% year over year. This kind of growth rate is very attractive, but at the same time kind of required for an early stage company. So when I started to invest in Ehang, the share price was 20, which had already had a good run up. But I would think 180% year over year increase, it would make sense for the share price to at least triple. On top of that, they were already making profit, and that was very unlikely for an early stage company. So I think that was a huge bonus for a lot of investors. Because usually when a company starts to turn to positive profit, it is a big milestone and usually the share price would reflect that. So back then, a profitable business growing at a super fast rate with strong advanced technology in the business in an industry that is huge in the future. It just seemed to be a no-brainer. But then the turning point came. First one was the Wolfpack Research short report that put a doubt in many investors' mind to begin with. And then second, the earning report that shows growth not up to expectation and the company projection on growth was mainly flat. So more disappointment. And then a final kick when the company announced the delay on the earning because of the auditing problem. Everything happened recently, one after the other, is enough to scare most investors away. So it does make sense to downgrade the quality of this investment based on these rational reasons. So it's actually a rational decision for rational investors to decide to stop their investment on Ehang. But if you are a visionary investor more than rational investor, then I will give you my reason on why I finally decided to stay invested in Ehang regardless of the share price constant dipping, and in fact took the opportunity to increase my position after I had spent a lot of time researching, analyzing on the company and the industry. In my future videos, let me just share with you the business model. There is no doubt that Ehang is figuring things out while they're growing the company. Changing the strategy or business model does not happen quite often. So I would say the year of 2021 would be quite an important year for Ehang. And because of this change, it would also affect their future projection and the growth rate at this point, because there is still more to experiment first, more to figure out. They are figuring things out, refining strategy while they're growing their business. And it is understandable given the fact that the industry is at a very early stage and they are the first comer, the most advanced in the industry. So it would make sense for them to be exploring based on the problems they realize for the industry. So recently, the company announced that they will shift the strategy to be more focused on the autonomous aviation platform instead of manufacturing their drones. There are 3 reasons why they do that. First of all, it's the vision since the beginning. We know that they spend a lot of effort doing R&D to focus on the autonomous driving, because the industry cannot grow if the users using their products have to have the license as a pilot or hire a private pilot. This is just not feasible. It's way too expensive. And if their mission was to solve the traffic problem in the city, then how are they solving this problem for real when it's not accessible for most people? So autonomous driving vehicle is somehow the must solution to begin with. So then it can truly be a traffic solution for the city, as it would be much more accessible, affordable for the mass. So this vision is great from the beginning, and I can really agree with that. Second is the safety issue. Think about it. The more drones they sell, the more safety concern there is, because there needs to be regulation on the air traffic. We cannot let everyone who bought the vehicle and navigate it everywhere as they wish. It's not yet a problem we can see because it's not in mass production. No government in the world has issued such certificate to allow this yet. But once they do, once it gets into mass production and mass sales, it will become a big problem. And that is what they see. So instead, they decided to shift the focus from selling this vehicle into building a platform that can central control all the vehicles flying. In this way, they would be planning the route, making the rules, setting the standard. And this, in my point of view, it's basically building infrastructure. And it is usually what the government would do. It is hard to imagine, but just compare with the roads we're driving in. This is just the same as building the roads, drawing the lanes, the traffic lights, the signs. Right now, Ehang is making the traffic rules and setting up standard. All of these works, in my opinion, is just what the government would do. So then it is no wonder the government is giving them so much support. A while ago, we saw that the Hezhou government is giving a 2 billion investment into supporting Ehang to build the manufacturing plant by building the Hezhou Aviation Industrial City. And also, it is not just money support, but also Hezhou is the first smart city with autonomous aviation vehicle operation platform. So that just means not only Ehang is building a massive manufacturing plant in Hezhou, but also Hezhou would be the module city where they can do a lot of trials and errors with massive data collection, which they can take into refining the operation platform. This is again the experimentation into refining a good smart city model with AAV, so then they can use this and copy it to expand to other cities. Also, the government is letting Ehang to make 100 test routes. The most important is including Hong Kong to Macau. This is such strategic location for China. It is giving them more recognition with more international exposure. So I think this is quite significant. The government is giving Ehang a lot of support. It is their best interest to want them to succeed. So that's why I was not worried about the certificate process. In April, we saw the news that the CAAC had established a new team just to help to speed up the process. of the certificate getting approved. As you see, they set up this new team called EH216 Type Certification Team. So this team's main purpose is to work with Ehang to figure things out. As I said, right now, Ehang has the roles and responsibility to make infrastructure building for the air traffic. So it would be the best interest for the government to want Ehang to succeed. And they're here to help and support. So I think it is very possible for Ehang to be the first one in China to get this certificate. And it is quite possible that China will be the first one in the world to grant this certificate to anyone. That means Ehang would have the best chance to be the first company in the whole world to get this certificate and put this into commercial use. So when this happens, expect this news to be explosive. And I am very much looking forward to this. It might be faster than we expected. And then the third reason why they decided to shift the focus right now is the timing, as they think the technology and the infrastructure is getting ready for the AAV. As we shared last time, China is by far the most advanced in terms of 5G infrastructure building. And with this, it would allow the vehicle to have smooth communication with the central platform to ensure safety. At the same time, the data collection can help refine the platform and system later. Another good timing is because they believe right now we are at the last stage of the certificate process. And once they are granted the certificate, it will get into mass production, massive application. So that is why it is better we think about the solutions before the problem happen, instead of waiting for the problems and figure out the solution later. Better preventing the fire before rushing and thinking about how to put out the fire when it happens. All of these reasons require Ehang to shift their focus, refine their business strategy and business model. But because of that, I think most of the analysts have trouble to give Ehang a valuation, just because the traditional valuation model for this doesn't work here. They have shifted from the aviation manufacturer into the urban air mobility platform operator. So before, the valuation that analysts give them would be based on the sales of the vehicles and the profit margin. And also we knew that they were aiming for the SaaS model as well, the SaaS, software as a service model, because they were researching and developing their software for the autonomous aviation. And now it seems like they want to be more the PaaS model, the platform as a service model. And that would require a different method of valuation. And as a platform for air taxi, there is absolutely no previous example for that. It is yet to be explored at this point. In this case, it's quite similar with Tesla, where the analysts had trouble giving it a proper valuation because it's a new business model that they had never seen before. So right now, investing in Ehang, it's a little bit similar with investing in Tesla. At an early stage, we saw that Tesla stayed undervalued for quite a while because the valuation model was not up to date. There are still a lot of things to be explored, to be figured out. So before, their competitors were more like Joby, Lilium, Archer, or Boeing or Airbus. But now, it seems like they want to be the Uber of UAM, as Uber would also be getting into the business of air taxi. So now it seems like Ehang's competitor would be more like Uber or Didi, the Uber of China, because it seems natural for Didi to get into air taxi as well. But in the PaaS model, they still have a lot to prove. Their operation ability, the management, the talent, shifting from manufacturing into operating. It's a good direction for the business model, but yet they still have a lot of things to narrow down. They have a lot to figure out, to refine. Right now, it is hard for analysts to give them a proper price target, a proper valuation, because there are so many things uncertain. Like I said, the most important thing is the business model. And the business model is how they make money. So, how much are they going to charge per trip? How much do they make out of it? The percentage of the margin. These are yet to be figured out through their trials and errors. It is a lot of uncertainty. So we must know that at this point, investing in Ehang would be more like venture capital. We are investing in the industry. We are investing in the management, in the leader. It is full of uncertainties, but at the same time, it's part of the beauty. Because the market is huge, the potential is massive. Because if Ehang does succeed and manage to make things happen as they intended, then the limit is only our imagination here. But based on what we have, I do believe just their technology alone should be worth more than their current valuation, which is $1.5 billion. And once they have refined their business model and figure out more details later on, they should be evaluated more. Like I said, the business model of a company is the most important thing to look at because it basically decides how far the company can grow. In the next 5 to 10 years, how much potential it has. And I do find this business model much more potential. And if the company can deliver what they say, it will grow into a future giant. So this is the long-term vision I have for Ehang. Now let's talk about the share price. What a great day on Friday for us. At some point it was shooting up to 34% plus and then closed at 19%. But it should not be too much of a surprise. In the last 2 weeks, I've said several times that I think Ehang is still on an uptrend. It's still growing. As I just said, so many bad news, one after the other, had driven all the investors who were not long-term investors away. Whoever that were supposed to sell had already sold. Whoever remained might most likely remain. And as I suspected, on this day and this day, it was to make people sell as a last chance. So I said, so much effort had been done already, it doesn't seem like they would stop right now. And I also said, you don't need to FOMO because it's Chinese stocks, so there is always chance for bad news like political issue, blacklisting, SEC earning report, etc. to drive the share price down as the perfect dip to buy. I said EH support was at 27, and if you see bad news coming out and does not drive the share price to break the support, that might be a perfect buying opportunity. And as we saw on Thursday, there was the bad news of President Biden's administration blacklisting 50 more companies. So of course EH had a dip as well. And it dipped exactly to 27. So on Friday, it opened up, dipped again to 27 exactly, and then right away from 27 shooting up to 36. So do you think it's coincidence? For me, it sounds very much like a plan. It was plotted out since a while ago. I personally took the chance to trim a little bit of my position on Friday, and the reason was because back in January, when I bought 1,000 shares of EH at around $20, I told myself that my ideal position is 2,000 shares. It just shot up too fast that I had no chance to finish building my position. And I also said that if a market correction comes and drive EH down, I would be there to buy the dip. And I did. Throughout the whole correction, I took a lot of chances to buy the dip, and in fact, I have built a too heavy position. I kept buying on the way down on every dip. The last time was 22. So I overall had accumulated 4,200 shares to be precise. So this position had gone up to be too heavy. So I will take the chance to slowly trim the position once it has gone up. So then my portfolio is not too volatile. As you know, it is very volatile. I think it can keep growing, but then at some point it would have a bigger pullback. Okay, now if you have enjoyed this video, please give me a big like and write me a great comment. That's it guys, hope you can find my videos helpful. Make sure you subscribe to my channel and give me a big like. Thank you.